Good morning this Thursday, the 27th of April. I'm Grady Wolf, a market analyst with Bell Direct. Wall Street wavered during the midweek session before closing mixed as investors' fears of a banking crisis rise on the back of First Republic Bank's first quarter results and subsequent 49% decline on Tuesday. Upbeat earnings out of Alphabet, Microsoft and Boeing softened the sharp losses but weren't enough to turn Wall Street positive at the closing bell on Wednesday. At the closing bell, the Dow Jones fell 0.68% and the S&P 500 lost 0.38%, but the tech-heavy Nasdaq added almost 0.5%, buoyed by strong earnings results. Over in Europe, markets closed lower as investor fears of a banking crisis worsened. But London-listed bank Standard Chartered posted a 21% rise in pre-tax profit, which beat estimates and helped restore some relief in the European banking sector. Germany's DAX ended the midweek session down 0.48%, the French CAC dropped 0.86%, and in the UK, the FTSE 100 fell almost 0.5%. The local market rallied yesterday after midday following the release of the Australia's inflation data for Q1, showing inflation cooling to 7% over the 12 months to March quarter. In a sign inflation has peaked down under. Quarter on quarter, inflation rose 1.4% with the highest price rises from the medical and hospital services up 4.2%, tertiary education up 9.7%, and gas and other household fuels up 14.3%. The rise to 7% for the March quarter was slightly above consensus expectations of a rise to 6.9%, but shows inflation is beginning to cool. The rise in medical and hospital services is to be expected in the March quarter, as this is generally the period GPs and other health service providers review their fees, and the Medicare safety net is reset at the start of every calendar year. Tertiary education fees are also indexed at the start of the year. The significant rise in gas and other fuel costs reflects major events over the past year globally, including Russia's war with Ukraine and unplanned outages of coal-fired power stations, according to the ABS. At the closing bell of the midweek session, though, a sharp sell-off in utility stocks weighed the local bourse down to close 0.08% lower. On the commodities front this morning, oil continues to trade sharply lower, down 3.68% at $74.23 a barrel. Gold is down 0.41% at $1,989 an ounce, and iron ore is down 2.74% at $106.50 a tonne. On the economic calendar front today, US GDP growth rate data for Q1 is released tonight, with consensus expecting a decline in economic expansion to 2% from 2.6% in Q4. On the Australian dollar front this morning, one Aussie dollar is buying 66 US cents, 88.32 Japanese yen, 53.43 British pence, and one New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are anticipating the local index to open 0.22% lower to start Thursday's trading session in the red. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased its price target on Gold Road Resources from $1.90 to $2.05 and maintain a buy rating on the gold miner following the release of the company's Q1 results, including record quarterly free cash flow of $44.2 million, which beat Bell Potter expectations. The company also maintained production guidance and ended the quarter with cash and equivalents of $128 million, up $47 million. GOR is debt-free and updated on retained stockpiles at the Gruyere mine, which stand at 5.9 million tonnes at 0.72 grams per tonne, which provides an ongoing buffer against mining disruption. And Trading Central has identified a bearish signal on Rio Tinto following the formation of a pattern over a period of 94 days, which is roughly the same amount of time the share price may fall from the close of $111.94 to the range of $98 to $101, according to standard principles of technical analysis. And that's all we have time for this morning. Have an amazing Thursday and happy investing.